Hello, welcome again to another review for the week ended November 22nd. My name is Ambrose Omodio. We're looking at the market performance and at the same time what's expected in the new week that will be ending on the 29th of November. But before we look at the preview the week, we want to look at the previous week market performance. If you look at the market performance for last week and the two previous weeks, you can see that gradually the bull is taking over from the bear. But you know that when a market is in this trend, you didn't expect the market to recover overnight and move up. It's expected that it will go up and down. That is why you see in between these last 3 weeks, you see that there was days of market slowdown as a result of what? Profit taking. It is expected in the market. When you see the especially market have been in a downtrend for almost 2 years, it's expected that when it's about to bounce back, it's trying to make a U-turn up to be a gradual process. And that process is where a good investor or trader should know that at that point your accumulation should be fast, so that when the market mark up, you'll be in profit. But as we look at trend now, there is potential that this recovery will be sustained, but don't expect that it will continue like this. There are bound to be little correction, or we'll call it profit taking in the process. But for me, there's no cause for alarm for investors at this point. One, we know the factor that's driving the market as we speak now, and those factors are still intact until Tuesday, until Monday and Tuesday MPC meeting. You know what I mean? Tuesday is the last day that there will be communication from communicate from the MPC meeting to know decision they've arrived at. They are about to vote whether to cut the MPR or what, or to leave it untouched. This will determine where funds will flow. But as I speak now, the recent capital wave have shown you that funds are leaving one investment window to the other, searching for what? A better place that will get a better return. You know that funds flow in circle, like we call it circular flow of funds. You move around looking for a higher return where you can give the investors good return, even when it involves risk or less risk. But every investor wants his fund to bring what? Good returns at the end of the day. That's why I say that money is looking at where can I get a better return now. Before now that the money market and the fixed income market have enjoyed fund in that market because of what? The high risk in the capital market, at the same time because of some policies that have also not favor the capital market in terms of within and also international. But now that the recent change both in international and the local economy, things are changing for equity market, especially as the bank has been forced by the regulators to make sure that they provide liquidity for the private sector. I will tell you that year to date, liquidity to the private sector has moved from about 9.2% to about 11.12% in these few years. It tells you that funds are really going out now to the private sector or the risk sector, and it's a deliberate action by the CBN to make that it is the economy that will sustain whether growth or create employment for the people. If you really want a transformation in your economy or in the life of the people that you are ruling or where you are governing, you need to make policy that will help the economy, and the economy has to be running. When the economy is up and doing, the life of the people also will be up and doing. The CBN knows that the only way to stop unemployment is to make sure that the economy is progressive, the economy is expanding. And remember when we were having almost 5% GDP growth, things are not so bad as it is now. Things are not too slow as it is. That means from there we have moved into a negative growth in 2016 before we came out 2017. But the recovery since 2017 have been slow, and it has also reflected that the number of unemployment, because many sectors are not expanding, they are not increasing because of what? The economic activities. But with this new policy now, it's expected that the different sector will now have what we call fund to run their activities. For me, it's a good move in the right direction. Yes, this week that we're looking at, the week ended November 22nd. The market opened at 26,851.68 and it closed 26,991,000.24. The market recorded 0.52% growth. In addition to the previous week 2.02%. Tells that the market is still maintaining a positive trend, which is good. But the good thing here is that this market have rallied for these 4 trading days of the week, except for Monday, that investors took profit, and also as a result of what happened as Dangote flour was delisted from the Nigeria Stock Exchange as a result of the recent acquisition by Olas International. That also affected the market performance for that same day, the Monday, the first trading day of last week, which is also good. But for me, the market at this point, we have to be very careful, especially as the week ahead, or the week ahead, where we are expecting the MPC meeting to go for Monday and Tuesday. If you look at this trend here, this uptrend, and also look at the volume traded here, you see that the volume is going down while the weekly index action, which is going this index action on daily basis and weekly basis, is going up. If you listen on weekly basis, that's it, that market index is going up while volume traded is going down. This divergence is not too good. It tells you that the sustainability of this trend in the short term is very slim. That means profit taking can come up any moment from now. If you change this index movement to daily time frame, if you look at this movement here, also look at how the market from here have been trending up, and also look at the volume traded. It has been declining. They also tell you that there's a divergence between the index trending up and the volume traded for this period. It gives you a sign that the market also is likely to reverse very soon. Also, don't forget that we are in the last trading week of the month of November, and it's expected that profit taking will come in between. But this does not tell you that the market is going to go further low or lower than what it has recorded so far before. I think the correction will be just for a few days, profit taking. But also, if the outcome of the MPC meeting also come in support of the recent low interest rate, knowing that the GDP for third quarter came out stronger, and that of the inflation was a bit weaker because of what the closure of the border, and at the same time the imported food inflation, and also because that the rainfall that most farm was also flush out because of the heavy rain. These are the words, but I believe that of inflation is temporary. It can change any moment from now to normal, because knowing that also this season of the festive period, prices are likely to go up. But I mean, after this first period, we think things will adjust down, especially in the first quarter of 2020. On that note, there is no cause for alarm. The economic indicators, despite their miss, they are looking good compared to the previous quarter, which is also a good sign that the market for 2020 is likely to look up, and this will support what we're expecting in 2020. But don't be afraid because there's profit taking. You as an investor too, if you know you have entered position, those traders, they are bound to take, but the investors are holding for a long time, while traders are making money on the short term. They are bound to sell now and reposition again. But for me, if you are positioned for long term, you can buy your stock in stages and also look at what is expected at the end of the day. And also, if you look at the history of Nigeria, if you look at our budget system, for the past 10 years, the earliest time budget was signed into law was in 2013, and that was in February, and it was submitted to the National Assembly in October. And also, don't forget that this same 9th Assembly has also emphasized on returning the budget cycle from January to December, which is the fiscal year, which is good. If this happen, in addition to what we have seen, the impact of even the little impact of CBN policies at the beginning, and you expect that this will do more, because by 31st of December, we expect that the bank's loan to deposit should increase from 60, which was in September, to 65. It is that more funds also move to to the private sector, move to what, to the real sector. This also will make, especially the manufacturing sector. Also, if you look at the performance of the manufacturing sector in the last GDP that was reported last week, it shows that there are some sectors are looking up. You can look at the IT sector, the communication sector, which also open your eyes that which sector again is new that will drive market in 2020. These are the things we're going to discuss at the Invest 2020 sectors, new sectors that are opportunity for you to take position. You can see that the communication sector as well as contributing, to the GDP now, because that it lifted GDP for third quarter. And at the same time, too, you should at other sector, look at the non-oil sector, the service sector, or manufacturing sector, they all, live up. They don't look up for the period. It tells you that things are changing. These policies we are seeing are gradually impacting the economy, which we expect that this policy will blow more, will do more in the first quarter, where the CBN have the banks have implemented their 65% by end of first. That more funds will also be pushed to the real sector. And you know that when the real sector is doing well, companies that are quoted are bound to post good results. Subsequently, it will also impact the numbers, which will also drive the price on the floor of Nigeria Stock Exchange. But I believe that also the CBN is not sleeping, because as the bank are being forced now, let me use that language, to lend money to the public. I know this will not reflect on their book now, but as from second to third quarter of 2020, this impact will also reflect on their performance. If the economy do not go up in that direction, which I expect from the third quarter GDP, we expect that GDP for the last quarter GDP should also move to around 2.4 or 2.38, which is also on uptrend. That will also support the bank, because before the bank creates money through lending, and that will also give them more money if the economy maintain this up movement that we are seeing in terms of economic activities that reflected in the last GDP number that just came last week. If it's maintained, we'll see a better activities that also support the bank. But the government and CBN should know that they should not risk these banks' liquidity. Why? Because if the bank goes bad, it is tax fund that will be injected back to this bank. Then we have CBN and the government should make sure that the economy maintain this uptrend, so that the banks at the end can see their money back. Because if the economy is doing well, companies will pay back their loan. But when the economy is stagnated, when the economy is not making progress, that is where they default. And before now that the banks have struggled with non-performing loan before recent time, that they are coming back to the regulator. The regulatory mark of about 5% non-performing loan. About 3 or 4 banks are below that, which are good. Only few banks are above that regulatory stretch mark, benchmark, which is good. That means they need also to work on it. That's why the economy needs to work for 2020, so that these banks will not run into bad water. And I know that when the risk aspect is maintained, the economy will move, because anywhere in the world, bank is the engine room of any economy. Now they are lending money to the people. We expect them also to get return from their investment. And also the week we are entering, which I have said, I expect that the market also will look up, but it missed performance because of profit taking and the outcome of the MPC. But you don't need to panic. You need to just put your eyes in the stuff you are buying. Take position. If you are taking position now, buy those fundamental science stock, those stocks that technically that are okay. And you know that when you're a trader does not mean that you must look for stock that you want to stay for 20 years or want to stay for 1 year. If you see a stock that giving you sign to rally technically, you can make 10 to 15%. You can jump in, because you are not marrying stock as wife. That's for trader. But for investor, you can hold on for a long time. On that note, we will draw the curtain here. But before I draw the curtain, I will say that the Invest 2020 comes up on the 7th of December. And at this training, we're going to discuss real practical, real sector where you make money. I mentioned one when I was explaining the GDP result that just was released. You see the impact of non-oil sector coming up. How can you take advantage of which companies are in these sectors that you can look at? Yes, in 2020, that budget is likely to impact activities of those sectors that also reflect on the economy. Now that the manufacturing sector are coming up, if you know that the manufacturing sector have suffered no huge loss in recent time. They are the highest loss so far in terms of index. Look at index performance, about 30% loss year to date. It says there's opportunity there. The banking sector, where there is consistent dividend payment from most banks, their yields are high now. And you know that these funds that are coming from the pension fund, coming from the insurance company, you know that insurance company, they also invest because of they have a pool of funds and it's for long term. You know, and other companies that are coming back because you know access to OMO, to Treasury have also because of low drop, because of the drop in interest rate. Treasury is not attractive now, and also access is limited to corporate and individual. On that note, funds are likely to flow to equity. But also don't forget that there is risk associated with equity. But if you take calculated risk by buying the right one, that is why you have to be at the Invest 2020, where these stocks that you are supposed to buy will be made clear and you position early. You'll be given, for example, now you know that in Treasury bills, in fixed income, they count their returns in days. Yes, we are going to also tell you how you can also use your equity market to benchmark whatever the money market or fixed income is doing to see whether you are ahead of those markets. That is why you need to be in this summit. And this summit, I tell you, the professionals that are coming are not coming to tell story. They are coming to let you know these are where you should pitch your tent, because it is what? It is your money. It's your hard-earned money. You need to multiply it. You need to grow it, especially now that the market have lost almost 28 to 33% in 2 years. You need to recover your losses. I'm telling you again that many investors, portfolio or traders are not smiling because of this long down bearish trend that have kept the market in a bearish channel for more than almost a year, 2 years. On that note, make yourself available, and at the end of the day, you have cause to thank God that you attended Invest 2020, because your portfolio in 2020 will be different from what so far you have seen in 2019, because this opportunity, I want you to ride with it. And you know that in equity investment, your ability to point out opportunity first before others make the difference. If you position early and others are coming, as they are coming, you are making money. And that's why we need to position before the foreign investor. We are the local investor. We are the money leg. We need to be in the market before the foreign investors start coming in. As we speak now, they're also still watching, looking at to see the outcome of the MPC meeting this week by Monday and Tuesday. Once it is settled, and they know they can start coming gradually, because over there their rate cut has made funds cheaper for them to go to anywhere and make money. And you know that funds left emerging market and frontier market when they were doing interest normalization over there in advanced countries, especially in US. But now they are cutting their rate. Funds is likely to go back to emerging market where there's opportunity. You know that I said it earlier, both internationally and locally, funds are looking for where there is a higher return, circular flow of funds. When you see that opportunity there in US, in other funds will leave emerging market to there. When they see that funds that they go back to emerging market where they can even not minding the risk associated with that return, but they say they are okay, they can also funds will start going back to emerging and frontier market. Knowing that Nigeria is one of the frontier market that that's selling really at a discount. But let me say that, because out of the frontier markets in Africa, or all frontier markets all over the world, Nigeria is selling for almost 5 years low of his assets. Tell you that our markets are attractive as to speak now. Selling a P ratio of market earnings price earning ratio for about 7 point something, while the average for the market is about 11 point. It tells you that Nigeria market is really undervalued, and that will attract foreign, especially if the government will give us a good direction in terms of policy, economic policy reform, expecting that the new economic teams also come in place with their policies in 2020. If so far we have not seen what they are rolling out for, but I know before we cross to 2020, they would have come out with a guideline that will also support what CBN is doing and what the fiscal policy is doing, because they need to marry the two. The fiscal and the monetary policy need to work together so that they can drive this economy to one direction. Not that the monetary policy and the fiscal will be going opposite. They need to complement each other to bring the faster economic recovery that we're expecting in this next 4 years. And I know that as an investor, if you know what to do at the right time, you will smile to bank at the end of the day. We'll call it a day. Thank you for listening. God bless you.